Welcome to the deep dive. Today we're looking squarely at something I think many of you are feeling, that squeeze on the middle class. If you're finding it tougher, make ends meet, even though it feels like you're working harder than ever. Or if maybe the rising cost of just about everything keeps you up at night. Well, this deep dive is definitely for you. Our goal today is pretty straightforward. We want to really understand the key economic forces reshaping the middle class and, crucially, equip you with practical strategies, stuff drawn from our sources to help navigate these shifts, maybe build a more resilient financial future.
That's right. We've gone through quite a bit of material to pull out the most vital insights. It's
Mhm.
easy to feel a bit lost, I think, in all the talk about the economy. But if we focus on the core drivers and,
Yeah.
maybe more importantly, the actionable steps, we can move beyond just, understanding the problem towards finding some real solutions.
Okay, so to kick things off, our source material points to four main factors. They're all kind of interconnected, really, contributing to this shrinking middle class. We're talking about that tough combo of wages just not keeping pace with inflation. Then there's the growing burden of debt, plus fundamental shifts in the job market itself. And finally, the increasing divide in wealth. So let's start digging into that first one, stagnant wages and inflation.
Yeah, and what's really striking here, I think, is how it kind of disrupts this long-held idea, this expectation. Historically, being middle class meant having a stable job, one that allowed you to comfortably cover necessities, have some leisure time, save for retirement, maybe support a family. But that balance has become increasingly fragile. We've seen this significant decoupling. Productivity goes up, but wages for many in the middle, not so much.
That's such a key point. And the source material really hammers this home. Even as the overall economy, maybe even productivity has grown, the actual wages for a large chunk of middle income earners haven't kept up, especially not with the rising costs of essentials. I mean, think about housing prices,
Oh, yeah.
healthcare, education, even just groceries week to week. These costs have often just outpaced salary bumps for so many people.
And this has a huge knock-on effect on people's financial security, obviously. Individuals, families who maybe once felt relatively secure, solidly middle class, now find themselves in a much more precarious position, constantly juggling budgets,
Hmm.
struggling just to maintain their living standards. And it's not just about cutting back on luxuries anymore. It's increasingly impacting the ability to afford the basics.
Right. Which leads us pretty naturally into the second major pressure point identified, rising debt levels. It almost feels like carrying some form of debt, student loans, mortgage, credit cards has become, well, normal for many.
Exactly. Our sources really highlight how these different types of debt are collectively putting a huge strain on the middle class. Mortgages, student loans are a big one, obviously. Credit card balances creeping up, auto loans. And it's important to see how these things feed each other, right? Costs go up, wages stay flat, so people might lean more on credit to bridge that gap. But then those debt payments just become another big monthly bill, which,
Yeah.
further limits your ability to save, to invest. It makes it really hard to actually get ahead financially.
Yeah, it sounds like a really challenging cycle to break out of. Okay, so let's turn our attention now to how the job market itself is changing. This feels like a really dynamic area, lots of shifts happening.
Absolutely. I mean, think about the growth of the gig economy, the rise in contract work, short-term projects, and of course, the increasing role of automation in various industries. These are fundamentally reshaping what employment looks like for the middle class. Now, sure, these changes can offer maybe more flexibility in some ways, but often the trade-off is less job security, fewer traditional benefits. That old model of a long-term, stable job with a good health plan and a retirement contribution, it's just becoming less common for a lot of people. And this shift towards, well, less stable employment makes long-term planning much harder. Things like saving consistently for retirement or even just handling an unexpected expense become way more difficult.
Okay, so we've got stagnant wages, rising debt, a changing job market. The fourth key factor highlighted in the sources is wealth inequality. Now, this can feel like a huge, maybe abstract issue. How does it specifically contribute to the middle class shrinking?
Well, if you connect it back to the trends we've already talked about, this widening gap between the wealthiest folks and the middle class, it has real implications for economic mobility, for moving up. Our sources show that the net worth, what people own minus what they owe, for those at the very top, has grown massively, exponentially even. Meanwhile, for many in the middle class, wealth accumulation has either stalled
Or even dying down.
or even declined. Exactly.
Yeah.
So wealth isn't just about your paycheck, right? It's about assets, your home equity, investments, savings, the things that build security over time. This growing disparity means that while some see their assets balloon, many in the middle haven't seen much growth there at all, which makes it harder to build that financial safety net, harder to improve your economic standing long term.
Got it. So it's not just the income flow, it's the actual accumulation of assets, that long-term security. Okay, so that paints a picture of the challenges. Now, the second part of our material, thankfully, focuses on some potential solutions, concrete strategies you can actually consider to, navigate these challenges and maybe build a more secure financial future. The first area they focus on is increasing your income streams, suggesting that maybe relying only on that one traditional paycheck, well, it might not be enough anymore.
Yeah, that's a really important shift in thinking, I believe. That traditional model, one full-time job, provides everything. It might not be the most secure or effective path now for many. So the sources really encourage exploring ways to supplement that main income. And the digital age, well, it's opened up tons of avenues for this. Things like freelance work, maybe using skills you already have,
Right.
or starting a small online business around an interest or some expertise you've got. Even becoming like a content creator in a specific niche is mentioned as a possibility.
Okay, interesting. The second strategy then revolves around investing wisely. This can sometimes feel a bit daunting, I think, for people, but the sources seem to really stress just getting started, even if it's small amounts.
Absolutely. And the key reason is compounding.
Hmm.
The earlier you start investing, even small amounts, the more time your money has to potentially grow. The sources mention the fundamentals,
Yeah.
stocks, bonds, real estate, mutual funds. These are seen as key tools for building wealth over the long term. They also touch on some alternative investments like cryptocurrency or peer-to-peer lending. But it's important to note, these usually come with higher potential returns, sure, but also significantly higher risks. You need to understand that. The core idea, though, is investing in assets that have the potential to grow in value and maybe generate some income over time.
Right. Makes sense. Now, flipping to the other side of the coin, there's the strategy of carefully managing expenses, really truly living below your means. It sounds simple, maybe obvious, but it can have a massive impact.
It's absolutely fundamental. Increasing income is great. We just talked about that. But managing your spending effectively, that's equally critical. Maybe even more so, some would argue. The sources suggest taking a hard look at where your money actually goes, identifying areas where you can realistically cut back. Maybe it's dining out less, maybe reevaluating luxury buys, canceling subscriptions you don't really use.
Those subscriptions add up fast.
They really do. The key is creating a consistent gap, a surplus, between what comes in and what goes out. And that's true regardless of your income level. That discipline creates the funds for saving and investing. It builds a stronger financial foundation, helps you weather unexpected storms, and just accelerates wealth building.
Okay, so discipline on the spending side. The next strategy is about adapting to that changing job market we discussed, specifically acquiring in-demand skills. This feels like a very proactive, empowering step.
Definitely. It's about kind of future-proofing your career, right? And boosting your earning potential. The sources point to sectors like tech, obviously, data analysis, digital marketing, anything related to automation. These areas are growing fast. So investing in yourself, developing expertise in these or other expanding fields, it just increases your value. It opens doors to potentially higher paying jobs, whether that's traditional employment or finding better gigs in the gig economy. And the good news is there are more ways than ever to learn new skills now, often cheaper and more flexible than traditional routes.
Yeah, and it's not just about going back for a full degree, is it? The sources mention the explosion of online resources, courses.
That's a crucial point. You're exactly right. The accessibility of online learning platforms, Coursera, Udemy, LinkedIn Learning, countless others, it's really democratized education in many ways. Makes it easier than ever to pick up new skills, upgrade existing ones, often at a much lower cost and on your own time, compared to, say, a traditional university program.
Right. Okay, another potential path highlighted in the sources is entrepreneurship, starting your own thing. Now, that can seem pretty intimidating, I think, but the way it's presented here feels maybe a bit more accessible.
Well, entrepreneurship definitely involves risk. There's no doubt about that. But it also offers the potential for much greater control over your financial destiny and potentially the opportunity to build significant wealth. What the sources seem to encourage is maybe starting small, experimenting with a business model, being adaptable. And again, the online marketplace has dramatically lowered the barrier to entry for many types of businesses. You don't always need a massive pile of startup cash like you might have needed, 20 or 30 years ago,
Hmm.
especially for online ventures.
Okay, good point. Finally, the last strategy that the sources really emphasize is the importance of embracing financial literacy. This feels like, well, like the foundation that holds all the other strategies up.
I couldn't agree more. It really is the bedrock. Understanding the fundamentals of personal finance, just how money works, how saving works, how investing works, how to manage debt responsibly. It's absolutely essential for navigating today's complex economy and building that long-term financial security we're talking about. And the really good news here is you don't need a finance degree to become financially literate. The sources point out the sheer volume of free or low-cost resources available now. Blogs, podcasts like this one, online courses, books, they're all designed to help you boost your financial knowledge and make smarter decisions with your money.
Okay. So, as we start to wrap up this deep dive, it's clear, isn't it? The shrinking middle class, it presents some really significant challenges for a lot of people. But as we've explored through the source material, there's also a sense of empowerment here. It's not necessarily an insurmountable problem. There are proactive steps, concrete things you can actually do.
That really is the key message, I think. The core actions seem to revolve around actively working to diversify, increase your income streams, making informed, wise investment decisions over the long haul, and crucially, maintaining that discipline of consistently living below your means.
Yeah, and if you add to that the commitment to adapting, keeping your skills relevant in this changing job market
Yeah,
and prioritizing your own financial education, just learning more about this stuff, you're really equipping yourself much better to navigate these economic shifts.
absolutely. Ultimately, it's about consistency, a proactive approach to your finances. That can lead to a more secure future, one that's hopefully less vulnerable to whatever broader economic headwinds come along.
So let's leave you with a final thought to maybe cue on. Reflecting on everything we've discussed today, what's maybe one concrete action, just one thing that you could commit to starting today? Maybe it's exploring a potential side hustle idea. Maybe it's taking that hard look at your spending habits we talked about. Or maybe just finding one good financial literacy resource, a blog, a podcast, a book, and starting to learn. What's one step you can take right now to grab a bit more control of your financial path? And maybe what further resources could you explore to deepen your understanding of these really critical topics?